traders, welcome out to your currency midweek for November 9th, 2022. As per usual, Corey here with you to go through the midweek, and let's have some fun. Let's go through some charts and let's make a game plan for the week ahead. Quick reminder, make sure you follow your trading plan. So let's get to it. Now, this past week, there's quite a few different stories that are in play, and it's interesting how the market digests those. Generally speaking, things that are in bear markets, there just tends to be things that come out that are negative on the news cycle. But how the market trades and digests that is very instructive. And so I would look at the stock market and say, are we in a bear market? Yes, absolutely. Not really debatable, right? We're 20 some odd percent off the highs. We're in a bear market. However, has the market had a lot of things thrown at it, and are we up over the past couple of weeks? And the answer to that is also yes. So the market is digesting a lot of bad news. If you had told me that crypto would be collapsing, that the Fed would be extra hawkish, that Amazon, Google, Apple, these are the biggest, most heavily weighted stocks in the entire market, Meta and Tesla and all those stocks would be getting hammered, and yet the market's hanging in there, I'd have said, I can't believe it. I can't believe that's happening, because that's just not what you would anticipate. Now, I get it. The market's down 1% today, but it's actually really shaken off a lot of this bad news quite well. The majority of stocks, if you look at advanced decline lines and things like that, the majority of stocks are actually going up right now. Are the biggest companies going down? Yes. Are they big news getters? Yes. But look under the surface, and actually there's some risk taking in place. So I think that carries a little further. I think we have a little more upside to go here over the next couple of weeks. The US dollar, we've talked about this. I like it on the short side. I think we've moved into a downtrend. I told you my kind of thesis and whatnot. I'm not going to rehash all of that, but part of why what should be a tailwind for other risk assets. I'm not a big Twitter guy, but I actually tweeted about gold and how I thought that the miners and the dollar itself on Friday was a very important day. And so I tweeted about this on Friday, that the US dollar reversed lower and gold and silver and some of those made a big reversal higher, and I bought into that. So I'm long gold, short US dollars, all those sorts of trades that I talked about there, and I think it has legs. Not only is it working right now, I think it continues to work in the coming days and weeks ahead. Now, if you take something like gold, I don't think you rush out to buy it right here today, because I think it's like any asset, it tends to zig and zag, right? We just had a huge explosive move upward since Friday. I think we'll pull back a bit, and then we'll get another chance to buy it. I think the US dollar will have some rallies, which ultimately are your opportunity to short. So is the US dollar a screaming short right here at this exact moment? Maybe not, but it will give you opportunities, I think, to consider that and to look at it again and again for opportunities. The crypto markets are falling apart. FTX, one of the biggest. There's really two huge operations. There's FTX and Binance, and FTX basically is collapsing. They're going to have to sell the company for pennies on the dollar. A lot of people would wonder if it was all kind of, fake money anyway, that all of their buildup and the reason that they had been worth so much was essentially a token that they had invented out of nothing and so on. And because they'd convinced enough people that it was valuable, that its price had zoomed higher. Now, if you've been on here with me for many months, I bash NFTs and these tokens, and I believe that 90+% of all that junk is going to zero. It's destined for zero. Now, does that mean that everything goes to zero? No, but it means that most of it probably will. So I can't say I'm super surprised by this. I mentioned crypto. I mean, I just have a negative viewpoint really on it. We've looked at it a few different times and it was boring as all get out going sideways, and then it started to jump up a week or two ago, and I made special mention to say, for me, I didn't trust it. For me, I would much rather short that big spike upward. And like I said, the market will ultimately judge and jury, right? We'll be able to see whether that was the right call in the coming weeks ahead, and it seems to have been. I got a little lucky with that one because I didn't know what would fuel it, but the odds that it was just going to go on a big run. I don't like the economics. I don't like the market environment. Interest rates have skyrocketed. You can get value elsewhere, not taking that type of risk, and it's just in this deep bear market. When it builds a huge base like that, normally bigger the base, the bigger in space, the bigger the move that's coming, and that seems to be the case. So I'm not super optimistic on crypto. I do have to say, again, it's made a huge move to the downside. So pick your spots if you're going to bet against it. Certainly, I'm not saying short it aggressively today or anything like that, but I did not trust that rally a couple of weeks ago, and really tried to make that clear when we did the midweek a couple of weeks ago. So in the New Zealand information, inflation expectations have gone up. Expectations are now for it to run in the 3.6% range. And there's not really much on the economic side because of the election results. In fact, there's zero in the way of economic results out in the US today. So we're getting midterm elections. What the markets cheer on is a split dynamic. We know that we've got a Democrat as a president, so they want to see Republicans win the House or the Senate. They want some split that way. When one group controls it all, that tends to be more of a negative for the markets. And it really doesn't matter which one, by the way. It doesn't matter if it's Republicans that control everything or Democrats that control everything. Complete control is usually a market negative. If it's more split and Republicans control this and Democrats control that, that's generally seen as a more market positive, and that seems to be the way it's going. But there is some risk that that won't be the case as we're getting results still. The Senate is coming down to the wire. It looks like the House is going to be controlled by the Republicans, but again, we don't know for sure. So as we look at this week's performance, I mean, the stories this week seem to be crypto, which has just collapsed. Some of these tokens and coins have lost 99% of their value. We'll look at some of them that we even track on a week-to-week basis that have gone down 50%. So it's an absolute bloodbath. Not a ton of movement elsewhere. Oil struggling and gold flourishing. I mentioned this last week in the midweek. I actually have turned a bit more cautious on oil. I tried to play that over and over again to the upside, and it was working. And we talked about it for months, that it was the only commodity that kept holding up well and kept holding up well. And then a week or two ago, and by the way, oil, I mean, I was too early to that call because the energy market kept going higher even as I got a little cautious. I wasn't shorting it aggressively, but I basically said, I'm not going to play that to the upside anymore. This week seems to be the week where it's starting to actually come off. So I was a little early on that call of take profits on oil, get out of energy, uh, look elsewhere type of idea, but I think it's playing out now at this point. So let's look at this S&P chart. Again, pretty impressive. I mean, here's the Fed meeting, and it initially spiked on the actual rate statement. We played a dollar trade, and if you traded with us a week ago on the Fed meeting, you did well. Hopefully you did well on the trade, but if you took profits on the whole thing, you did better. If you tried to hold the other half, what happened? Well, we locked in profits on half. If you tried to hold the other half, as soon as Powell started speaking, he had a hawkish message, and the dollar reversed and the markets reversed, and so you'd have been stopped out at the second half at break even, basically. So you'd have made a little, but it certainly wasn't, some home run or anything that way. if you tried to trade the other half for more upside. Now, from there though, we went down the very next day on Thursday, and we've gone up since. We're basically back to Fed meeting announcements. And again, think of all the things that have gone wrong during that period of time. I mean, oil is down sharply. So, that can be seen as a positive or a negative, but it's kind of a risk asset down. You're seeing gold, which is usually kind of a safe haven defense. It's spiking upward. You're seeing the huge large cap stocks struggling. You're seeing Tesla getting hammered and Amazon and so forth. You're seeing news cycle that's negative in terms of crypto, and that can kind of filter through to other sectors because some of the financial entities and so on have some risk to crypto, and yet the market was able to weather the storm. So I can't say it's a guarantee that we go up, but that's certainly as I'm thinking it's going to. And you could call this a little pennant formation. We'll know for sure on the breakout. And the next breakout should have momentum. It should be running about 1,000,000 miles per hour. We shall see. My inkling is that it's going to go this way, that we're not quite done, that there's one more spike to the upside. And from there, I'm not super optimistic. I don't think that the bottom is in, for example. I don't think that it's just up, and away for years to come. I still think that we're in a bear market, but I'm not sure this correction is done. The reason I'm a little cautious, though, is I completely understand that I am swimming up in a down market, right? Well, I know the bigger, longer term trend is down. So I'm trying to go with the flow a little bit here and catch a little bit of a wave to the upside. But ultimately, this is likely to fail and come back down in the coming weeks and months. So it's a little bit of a counter trend, kind of big picture idea. The FX markets certainly not as volatile, but you're seeing a couple of things there in Europe and Swiss franc trading well, up each about in the 1% range. Australian dollar, New Zealand dollar down, everything else flat. So kind of a quiet-ish week, but certainly some things moving. This would be, kind of a mixed bag. Nothing too major happening there. And then you turn to crypto and you say, oh my gosh, what is happening here? So down 50% in Solana and so forth, down Ethereum down 25%. I mean, this is in half a week that we're talking about these numbers. So as you look at this, I mean, there's some real crisis happening here. And it's tough because this is not only an unregulated market, it's an uninsured market. If I have my money in a stock brokerage account, it's a little bit different. If I put my money in a bank, it's a little bit different in that I have, FDIC insurance or investor type of insurance and so forth. And what that means is that even if my bank or brokerage goes under, I'm insured to X amount of assets, right? If I have under 250,000 or under 500,000, I'm insured up to that amount of money. When you have, and by the way, if you were to go out and it is insured at Interactive Brokers, as an example, where we do our capital sharing accounts. But if you were to go up and open some FX account somewhere, at Owanda or wherever, it's not going to be insured. And if you go open some crypto account with FTX or these other, it's not going to be insured. And so right now, we're in a situation where FTX has halted withdrawals. There's basically a run on the brokerage. And why? Because, like, the great Will Ferrell says, if you're not first, you're last, right? If you're not the first one to get out, you could be the last one, meaning you go down with everyone else. And so there's a literal run on that brokerage saying they're going under potentially, and I got to get my money out. and there was something like 6 billion, 7 billion in withdrawals or something like that from FTX, and they've now halted withdrawals. And they're trying, the CEO put out a thing that they're going to try to save customer assets. We're talking about one of the biggest entities out there at risk of going under, and it's just a mess. It is a complete disaster. So there's always been added risk in the crypto markets without question. This is one of them. I can't say that I would have predicted that FTX was going to go under. I don't know enough about them to predict they wouldn't either, but you would think that this is like, the JP Morgan Chase of crypto, or so it was supposed to be. But it's such a new industry and there's just so much stupidity in it, not to offend anyone, but this whole NFT craze, all of these tokens, these things that they're kind of creating is a bit of a mirage. And I'm sure that some of the people involved have good intentions. Okay. I'm sure some of them are honest, but there's also a lot of fraudsters. There's a lot of, charlatans and things like that are just mixed up in this. And so it's hard to know who's what and what's where. And it's ugly. And so why, does this is this the start of the collapse for many of these coins? I think that's probably the case. I mean, you're not supposed to go down over half of your value in 3 days, right? That's not a stable market. That's not a quote unquote stable coin and all these sorts of terms and whatnot that they use in that market. And I, I've been of the mindset. I mean, they've created thousands and thousands of coins. Again, most of them and these tokens and things are destined for zero. If it's not now, it's still in the future. Now, do we have a world where Ethereum and Bitcoin and some of these things retain value and continue to trade? We'll see. But this market, I mean, it's vulnerable right now. It's basically in its own global financial crisis. And this is why you can criticize the Fed, and I do plenty. But this is why the Fed exists. If you ever ask yourself, why does the Federal Reserve exist? Well, basically, it can come in and act as an adult and as a backstop when nobody trusts anyone. And they don't have anything like that. There are no backstops. Basically, FTX is now being taken out by Binance, which is the very last line of defense. And what if Binance starts to collapse? Well, there's just nobody left, and all of a sudden, all of those values implode. It's like a huge Ponzi scheme or something that just kind of collapses on itself. They're not able to pay out. In the old Ponzi scheme, you would take in new investor money to pay out the old investors, right? And you keep that Ponzi scheme going. I'm not suggesting that the entire crypto market has to be a Ponzi scheme, but it just doesn't have anything there to kind of backstop it. You might say, well, the US dollar is nothing. It's just a made up piece of paper. Well, true, sort of, but the US dollar is backed by the US government. Basically, the US government has the ability to tax and bring in revenue. It actually has a balance sheet, it has money coming in. Now, it does have debt, it has cash flow, it has actual fundamentals that you can analyze, and they can tax the citizens, which brings in capital to pay off debts and so on and so forth, right? So there's an actual establishment there of business. When you create a coin, if I go out and create the Corey coin, well, it's not backed by anything. Now, I can convince enough people to buy it and its value goes up. And if they show their friends that they've made a lot of money and then their friends become interested and then they start buying it. But that doesn't mean that there's anything truly there. And I have no way to generate revenues and other things. It's kind of sort of a Ponzi scheme if I go create my own coin, because what's driving it higher? Well, as long as there's people willing to buy it, its value can be retained. If this is as bad as it could be, and people don't even trust that they can have their money in any of these accounts, that they can buy these and they won't be stolen or collapse in value and so on. Confidence goes away. That's how currencies cease to exist. And that is very true of these coins. Will they start to cease to exist over time? Yeah, absolutely. Now, many of these coins out there have already collapsed to zero. Will some of these, which are bigger and supposedly, kind of the biggest market caps and whatnot, um, I think so. Unfortunately, I think that's the case. So it's going to be interesting to see. There will certainly be, we'll be talking about this to our kids and our grandkids. Now, let me say one final note. If you are the ardent believer, if you believe with your heart and soul that Bitcoin and Ethereum and these things are the way of the future, and that they will become widespread, and that it will eventually, be the next quote unquote US dollar and so forth. There are people that truly believe that. Let me put on the investor hat and say, now is the time to buy if you find yourself in the camp of believers. Okay? If you find yourself in the camp of believers, this is how you're supposed to buy investments. When there is blood on the streets, that's when you want to be an investor in the things that you believe in most, right? So let me not just speak the negatives, let me talk about the positives, because if you're willing to buy Bitcoin and you want to own some as a long-term investor and so on, I don't know that it's going to go up tomorrow or this week or whatever. But if you believe that its value is going to be massive and it's going to be adopted worldwide and that countries and economies are going to use this for decades to come, and we need to own some, to prosper and so on. If you are of that belief, how do you not buy now? Because this is literally the textbook situation for how you build an investment. You do it when there's just, again, blood in the streets, volatility sky high, collapsing prices, forced liquidations. This is the recipe. So I'm not advocating for that, by the way. You make your own decisions. It's going to be highly volatile, and I have, my own opinions for how the next 5 and 10 years are going to go. But if you are in that camp, you certainly have to consider this as a possibility. Let's go into the markets here and take a look at a few other things. So we've now pushed above the 20 and the 50-day moving average, which is kind of interesting. Again, given all the turmoil in other markets and around the world, the S&P has kind of been advancing a bit here. As you look at international stocks, maybe surprising to some, it's even better. And I prefer it. I would much rather buy VT than even SPY. You don't have the Apple and Amazons and Googles weighing you down, and you've got this lower dollar move, which has been a huge headwind to these. So, international stocks, precious metals, those things look the very best right now. As we look at crypto, you could say there's a lot more room to go, right? Because we're collapsing and we're just now breaking what were the prior lows. So after this multi-month base, we're now collapsing below it. Theoretically, there should be quite a bit more to go. Remember that this represents a basket of crypto. So, I'm not suggesting that there's not more downside. I find myself in that camp. But again, as an investor, you really can't pinpoint the tops and the bottoms perfectly. And this is the type of time where you'd want to allocate some capital if you are that long-term investor in the crypto markets. CPI comes out tomorrow, and CPI is kind of tricky. Year-over-year number is accumulative, right? We basically add up the month-over-month numbers for the past 12 months. This number is expected to come in at 0.6. Here's both the good and the bad for CPI. we need time to go away to get this annualized number to go down. Because the problem is that if you add up the last 12 months of CPI, some of the numbers that have come in are 1.1 and 1.2 and so on. And so we've got to move forward and we've got to start getting CPI that comes in month over month at 0.1 and 0.2. We've got to get lower numbers, yes, but we've got to shed some of those high numbers. And it takes some time to shed those. So this annual number is going to stay sticky high for a while. In fact, my guess is that it's probably closer to 8 or something, not 7.9 tomorrow. I think CPI right now, the year over year number is just going to stay sticky high. But if you notice how it's tracked and you look at where we're going to get rid of some of those high numbers in the coming months, that will really start to knock this number down. So it's headed towards 6 and maybe into the 5s and so on. But we need two things. Number one, we need time to keep going, so we shed some of the old high numbers. And number two, we need to input as low a numbers going forward as possible. And that will pull that annualized number down. I think that's going to happen, but it's going to be slow. On Friday, we get UK GDP expected to be in the negative territory again. I think we're already in a recession globally. I think the US is kind of held out relatively well, but we're heading that way right along with everything else. So let's take a look here at a few different charts. Here is a chart of Bitcoin, and this is to kind of show we've been in some different patterns here. This is a weekly time frame, so each candle is 1 week. That means, or you could turn it to daily and it'll just spread all those out a ways. Let's spread this. That's the same chart. You see how many months we've been sideways, 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 but here's the key component. And this is what we've talked about is, why didn't I trust this recent rally? Well, it's not really a good pattern. First of all, you'd be buying an attempted upside breakout in a big bear market. I don't like that. If I was gonna buy, I'd buy a dip, not a breakout. But ultimately, the highs are going lower and the lows are flat. And what's likely to come next is the breakdown phase. That deterioration. So the next couple of days are probably going to see some further declines. That's just the nature of this. I think some of the selling is going to be forced liquidations and so on, and it's just going to have to again take some time to get that selling to dissipate and to kind of calm down a little bit. Excuse me. Right now there are just too many unknowns about who holds what and how much risk is there and such. And this is really kind of bad for the stock market for the next day or two as well. I mean, I think stocks, if you take away the crypto crisis, I think stocks are higher. Let's put it that way. I don't know how much higher, but it's certainly not good for stocks. So some of the selling pressure today is related to that, I would think. So that's Bitcoin by itself. I mean, Ethereum, again, breaking some support levels here. And then some of these others just look like absolute train wrecks, right? Just to the downside where, here's Solana. And I mean, it started the week up here in the 30s. And now we're at 13. And, does it recover quickly? No. I mean, this is the type of chart that may be headed towards not zero immediately, but maybe over time, I would anticipate it's probably going to get down there to $2 and $1 and then eventually hit bankruptcy. It'll be a long, drawn out process, but that looks like one that may not survive this mess in the near future. And as you go through different cryptocurrencies, I mean, most things are getting hit harder than the Bitcoins and Ethereums because those are supposed to be kind of the bedrock. Those are supposed to be sort of the you know, the core aspect of it. Most people own Bitcoin plus other things, right? They don't just own other things. So it's kind of a core holding. It tends to be a little bit more defensive that way, but obviously just a mess and probably going to get worse in the near future. Let's turn to crypto, or pardon me, from crypto to FX. Now, here still is this US dollar chart and kind of my expectations. We talked about, sell the rally mode, and that's what I'm in. So now we've pushed below the 50 period moving average, which is the red line. You are staging a little reversal today, and I could see a little bounce here, but ultimately it should just keep with this pattern, kind of a descending triangle and a little series of lower highs, lower lows. That's my expectation for the next couple of weeks. So, a little more selling pressure in the US dollar. I think so. Is it possible that this is done already and that's all it was going to go? I mean, anything's possible, but it shouldn't be done if you kind of think of it from the standpoint of just even an ABC style correction. Unless this C pattern is truncated, it should extend down here a ways, even if that's kind of the bottom. So there should be a little more room to go in US dollar to the downside. As we look at some of these others, I mean, I'm less interested in the Japanese yen. It's bearish. If I have to do anything based on the chart, it clearly is bearish, but I don't know exactly whether I trust what I'm seeing and what I'm hearing in Japan, and I just feel there's an added risk there that I'm not sure there's a reward to. Continuing to short this seems logical because we've been in this base, since September, and usually when you have a big drawn out base like that, you'll leave the same way you came, which is down. So, does it break down? Probably, just based on the technicals, but it's not been at the top of my list. I don't know. I just have a sort of, maybe I'm completely illogical. I don't know, but I just sort of have a nervousness towards messing around with the Japanese yen. I feel like that's a central bank that we're going to wake up one morning and it's just going to be 3 to 5% one way or the other. And I'm not willing to take that risk. So I don't know. I'd rather trade some of these other things. Swiss franc, you can see the deterioration, but we're now bouncing back. This to me is a short setup because you're now, I mean, look, 20s cross below the 50 and you're kind of getting a spike back up. However, it's not really looking like you would want it to look. We call it when you trade a pullback, you want it to be kind of a walk back up, not a sprint. I'd like to see like this thing just kind of meander with some kind of weak candles and then start to roll over, right? This one started to meander up, and then now today we're bursting higher. So is this going to burst and break out to the upside? Are we down? Is the downtrend finished? Did we just kind of test this old breakout zone and up we go? I don't know. It doesn't look real clear to me, so I would lean towards thinking there's more downside, but don't really want to trade that aggressively. Last, here is something that I really like. We talked about this chart and the cup and handle. And if you traded it, boy, did it pan out. Did it hit our numbers and just look perfect. So again, we'll go through the general cup and handle concept. You had a 128.20 or so high. Your low down here was around 121, the figure. So if you look at the amount here, and it doesn't have to be an exact science, but basically you have a cup the size of the difference between the top and the bottom, right? So if we do the math, 128.20 minus 121 equals 720 pips. Comes out to this number. Okay, that's the difference between those. So that's the size of the cup. The handle will usually be about 30% of the size of the cup. So if the cup is this size, we need to take that number, 0.0720, and times it by 0.3. And that gives us this number, 216. 216 is 30% of 720. So that's about how big the handle should be. And the handle here, so you'd take this, the resistance that was retested, and you're trying to figure out where you can buy, where you'd buy the bottom of the handle. And it's 128.20 minus about 0.0216 tells us to start buying at about 126.04. Look at, I mean, it didn't hit that number and just stop perfect, but that's as clean and as good as it gets, right at the 50-period moving average. I mean, euro was a buy. We talked about this pattern before, and it was clean, and this is textbook cup and handle. So if you've been buying the euro since that kind of outlook, that was a pretty darn good outlook. I think there's more to go. The next phase of this should be a breakout. Will it be that perfect? No, probably not. It'll go up and then it'll do some weird little thing or whatever, but should keep working its way higher. If you want to go long things like Euro USD, buy euros, short US dollars, etc., I think that makes sense. But it was just, picturesque and a nice little entry point there. So we had analyzed that one before. British pound, kind of choppy in here. It's sort of the opposite of the Swiss franc, where you want to give this 50-period moving average the benefit of the doubt and say up, but we got a big ugly candle kind of testing that right now. So wouldn't surprise me if whichever way one goes, the other goes the opposite. If the Swiss franc fails and goes down, the British pound is probably succeeding and going back up. If the British pound fails here, the Swiss franc is probably going up. They're probably going to do the opposites. That's probably, they're in opposite patterns that way, and they're probably going to have opposite outcomes. Canadian dollar is about as boring and tight a range as you can find, but man, does that set up for a potential breakout. I don't know that you can do anything aggressively with the Canadian dollar right now, but when this thing finally bursts, it should have some real momentum behind it. This has been as tight a consolidation as you can find in the Canadian dollar versus those other currencies. So sets up for the mother of all breakouts. Australian dollar and New Zealand dollar, I'm going to lump them, kind of together here. I don't like how either one of them really look. Now the Kiwi is a little bit more upward moving of late, but at least you'd wait to buy until probably it comes down for a couple more days. The Australian dollar, obviously a lot worse in a downtrend and probably shortable sooner rather than later. So if you still like the idea of buying euros, this is my other idea, would be to short the Aussie against it. I think that would be, an obvious pairing here. Given the price action, the relative strength in the euro, the relative weakness in the Aussie, both at kind of pivotal junctures, euro looking good and Aussie looking bad and such, I think that's a pairing to continue to look at. So let's look at that chart. We'll finish here. Whoops, did I go past my currency? Oh, I didn't go far enough. There we go. So euro, Aussie, and we could just punch in the symbol. Let's just do that. So here's the chart, here's the trade, here's the idea, and it just looks pretty textbook. I mean, prior breakout point, successfully retested and advancing. Euro, Aussie continues to be an area that I would look at for upside trading. Now, this is the daily chart. Let's go into a little bit shorter time frame. Here's the 12-hour, just starting to accelerate. Here's the 4-hour. You can see essentially kind of a little downtrend line of sorts, sort of breaking out of that sort of idea, this little channel that it had been into the downside. We're starting to accelerate in the 1 hour. Again, just consolidations and breakouts. Looks pretty darn good across all of these different time periods. So I continue to think that's an area of interest. Where will crypto investors put their money? Well, it's a good question. First would be a question of whether they'll have any money left when it's all said and done. And second, they would probably, I mean, why has gold and silver gone up a lot in the last couple of days? This helps them. Just the same way that, if you think about gold, the creation, the new invention of crypto happened at a time when gold kind of hit its top. If you really look at kind of the creation, gold and silver had boomed up until 2011, and that was the peak. At about that time, crypto was just being invented, and it was sort of an alternative. Gold and silver are kind of seen as a currency play, an alternative currency, way to get out of US dollars or euros, but have some value retained and so forth. Crypto was kind of created, and I realize it wasn't created at exactly 2011, but that was kind of its infancy. Well, crypto boomed and gold and silver busted. And part of it was a lot of the people that would have been willing to buy this, they all went to this. So to answer your question, is some of that money flowing back? Yeah, I think that's part of why you've seen gold and silver and some of these things really start to pop. Here's a chart of gold. It doesn't look that good, right? Downtrend, downtrend, downtrend. But look at the last couple of days. That's a pretty darn big move. 2 days ago, I want to say, it went up $50 an ounce. So for the gold market, that's pretty dang good. I mean, you're talking about, you know, in gold, it's just a slower mover. It's not like crypto that way. But for gold prices to go up 3% in one day, that's a huge move in the precious metal market. So anyway, they would be a natural beneficiary of what's happening in this crypto collapse. So if we look at the calendar, we have a video coming out on order management, adding stops, legging into trades and such. We'll have our currency recap as per usual on Thursday night, and then we'll send out the FX trading room over the weekend. Have a great rest of your day. Thanks everyone for being here. We'll see you next time. Goodbye.